Welcome to the month economic update for the month of January. So if you take a look at the economic dashboard for Sri Lanka, economic growth is recorded at 5.3% for the third quarter in 2025, while inflation has remained positive throughout the last half of 2025, with CCPI and NCPI recording 2.1% and 2.9% respectively. And in terms of the external environment, a trade deficit of $731 million is recorded in 2025 November, while the exports recorded a growth of 5.4% year-on-year in 2025 November, and imports recorded a growth of 18.9% year-on-year in November 2025. If we take a look at the tourist arrivals, improved by 15.1% year-on-year in December 2025, whereas the earnings showed a growth of 1.6% year-on-year. And workers' remittances, which was also a highlight in 2025, recorded a 22.8% year-on-year growth in December. So if we take a look at the interest rates for 2025 December, they were kept stable throughout the month as well. The credit to private sector had a 25.2% growth in December. Overnight policy interest rate was kept at 7.75%. Now taking a look at the Sri Lankan update, the draft of the National Electricity Policy was made public in December, and this includes several policy updates such as unbundling the Ceylon Electricity Board into independent entities and introducing competitive procurement for power purchase agreements. However, there have been some concerns from the renewable energy sector, especially regarding the move away from traditional feed-in tariff. A joint submission on the feedback for the policy was made by joint chambers, and this can be accessed through the Ceylon Chamber of Commerce website for further details. And on the other side, we faced Cyclone Ditwa in November. And in looking at the recovery from Cyclone Ditwa, the World Bank's rapid assessment estimated the damage to be around $4.1 billion. And a total of rupees 500 billion has been allocated for 2026 for recovery purposes. And out of that, 100 billion rupees were allocated for damaged houses, 250 billion were allocated for infrastructure development, and 150 billion were allocated for livelihood support. And moving from Sri Lanka to the global landscape, the global economy showed notable resilience in 2025. And for 2026, the World Bank expects a global growth rate of 2.6%, whereas the IMF expects 3.3% growth. And if we take a look at global inflation as well as the trade, it is both expected to stabilize in 2026 despite the turbulence faced in 2025. And along with these, several policy priorities have been identified, including restoring fiscal buffers, safeguarding price and financial stability, as well as reducing policy uncertainty and accelerating structural reforms. So within this global outlook, we have identified geoeconomic confrontation to be a severe risk which will be faced in 2026 and 2027, whereas the economic risks are rising, especially expectations of inflation and asset bubbles are there for 2026 in terms of global risks. And for technological risks has also been identified as a significant risk, includes misinformation, cybersecurity, and adverse impact of AI as the three main concerns in terms of technological risks. And environmental risks, which has been a priority previously, has been deprioritized in 2026 due to all the geopolitical and trade uncertainty that is there in the world. So amid these risks and uncertainty, the gold prices have surged above $5,000 per ounce in late January 2026. And because of the diplomatic and military interventions made by the US, the value of the US dollar has weakened, which has driven central banks such as China and Poland to accumulate gold reserves to hedge against this currency volatility, driving the gold prices further up in the gold market. So to read up further on the topics discussed, I would like to invite you to visit the